Hello, 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 everybody. Hello, you guys. And welcome to my session of Let's Talk About Life insurance, that is. Life insurance, that is. So, thank y'all for joining me tonight. I really appreciate it. So, as you come on, I ask you to please, ma'am, please, sir, please share the live. If you don't mind, please share the live. Um, we're going to give everybody a few minutes to jump on with us. And we're going to go into a really, really good discussion tonight. And the topic for my discussion tonight is, why is it important to have life insurance if you just bought a home, or if you just had a new baby, or if you just have kids in general? Why is it important to have life insurance if you just bought a new home, you have kids, or you just had a new baby? We're going to tap into that tonight, and I'm going to share with you all the reasons why it would be important for you to have life insurance. I mean, it's important for you to have life insurance anyway, but for those three reasons, it's much more important for you to have life insurance if you have any of those three things going on. Now, before we get started, first of all, I want to apologize. I had to actually go back last week and delete my live from last week because I actually I misspoke on last week, y'all. I misspoke. And I don't know why I didn't catch it, but I caught it when I went back and I actually watched my live. Yeah, I go back and watch the live. But when I went back and watched the live, what I said that with your job insurance, the jobs are only going to allow you to get 1 to 2% of whatever your income is as far as life insurance coverage. I misspoke on that. I don't know why I didn't call it, but I didn't. So I'm coming back and I'm apologizing tonight. What I meant to say was the job will only allow you to get 1 to 2 times your income when it comes to life insurance coverage. That's what I meant to say. But I didn't, and I said it several times, so I don't know why I just didn't catch on, but I didn't. You know, we're all human, we make mistakes, but I'm coming back and I'm clearing up my mistake. That's what I'm trying to do tonight. I'm clearing up my mistake because like I said, I meant to say 1 to 2%. I mean, see, I'm saying it again. See, I meant to say 1 to 2 times your income, your salary, but I said 1 to 2%. And I didn't mean to say one. And y'all, the math was just not adding up anyway. I don't know why y'all didn't catch it and say something to me in the comment section. The math it wasn't adding up. The math wasn't mathing. It just wasn't math with the amounts that I was throwing out at you guys. Because I said, you know, if you were making $20,000 in salary a year, then the job was only going to allow you to get $20,000 in insurance, which would have been not 1% of your income, but it would have been 1 time your income. So yeah, I don't know why y'all didn't bring it to my attention. Like, listen, Miss Juanita, the math is just not mathing. It's not mathing with these calculations you're throwing out. So I'm coming back and I'm apologizing for that. Now, next, I always like to give out my credentials before I even get started with trying to share information and tips with you about life insurance. To let you know that I'm not new to this, but I am dearly true to this. So with me, I've been doing this business now for about 15 years, going on 16 years. And yeah, so I have been licensed now for 15 years. 15 years. And I love what I do. I'm true to what I do because I look at it like, not like as in a a business, I guess you would say. I look at it like being helpful and trying to reach out and help those that truly don't understand the true meaning of what life insurance is and how important life insurance is for everybody, not just for some, but just for everybody. So those are my credentials. I've been doing this now for about 15 years and going on 16 years, and I love what I do. Not only can I help you with life insurance, but I can also help you with doing some investments like in mutual funds. We also have a mutual fund class that is given by my upline, and he does it once a month, once a month on a Saturday morning. So if you're interested in joining that Zoom where he's literally breaking down and so you can fully understand what a mutual fund is and how mutual funds work. And then after that, if you decide that you want to invest in a mutual fund, he will sit down with you. Well, me and him, we'll sit down with you and we'll show you how you can invest in a mutual fund. Okay. So if you're interested in joining that Zoom with us 1 month, just let me know. All you have to do, you can send me an inbox. If you have my number, you can call me, you can text me, or you can email me. My email address is orrjuanita@aol.com. You can email me, you can inbox me, you can text me, you can call me. Just let me know that you're interested in investing in mutual funds and you want to know a little more information about mutual funds. And I'll be glad to connect you with that live Zoom that we have on once a month on Saturday mornings. And it's Saturday mornings at 9 a.m. And it's only about 30 minutes. Also, with what I do, we are always looking for agents to come on board with us, y'all. I can't stress how important it is for your family, the community, just for everyone to learn and know about life insurance. So, and not just life insurance, just building generational wealth in general. So if you're interested in coming on board with us, we are always looking for new agents to come on board with us, y'all. So let me know. It's a great way for you to make some extra income. And even if you're looking to maybe say find a different career path, this would be a great way for you to find a different career path in the financial service business. Okay. So if you're looking to make some extra income or you're looking to change your career, you just looking to make a little extra money, just contact me and I will definitely show you and give you all the details on what you need to know about doing that. Now, getting back to what our topic is, like I said, our topic tonight is why is it important to have life insurance if you just bought a new home? If you love your family, you should protect your family. And that's one reason why you need life insurance. If you love them, you'll protect them. That's just point blank, period. If you love them, you'll protect them. Now, if you have a new home, if you just had a baby, if you had a new home, you just had a baby, if you had a new home, a baby, or if you have kids in general, just kids in general. If you have kids in general, you definitely need to invest in life insurance. Now, the thing about life insurance, a lot of people, they think that that they can't afford it. But let me tell you this, getting life insurance and paying on it monthly is so much more inexpensive than if something was to happen to your loved one and you have to come up with a whole lump sum within a 7-day period. Because normally, once somebody dies, they have that funeral within a 7-day period. And you're going to have to come up with a lump sum if you don't have any life insurance. You're going to have to come up with a lump sum of money for the funeral home in order for them to plan your loved one's final arrangements. So that's much more cheaper. Well, life insurance is much more cheaper than just doing that. Okay. Now, by the end of this live, you'll know why life insurance is important. And y'all, I don't know why it looked like it's my y'all. Give me a minute. Okay, I don't know why that did that, but everything went dark. Everything went dark. But by the end of this live, you're gonna know why life insurance is one of the most important decisions you can make for you and your family. Now let me ask you this question. I'm gonna ask this question. If something was to happen to you, let's say tomorrow, if something was to happen to you tomorrow, do you think that your family, could your family stay in the home that they're living in now? If something was to happen to you tomorrow, do you think that your family that's living in the home with you now, do you think that they will be able to stay in that home if something was to happen to you where your income, your income that's coming in the house, that's gone? Will they still be able to stay in the home, the family home? Will they still be able to pay the bills? Because you know we have a whole lot of bills: light bill, water bill, cell phone bills, car notes, a lot of bills going on. And for those of you with young kids, you have daycare, y'all, and daycare today. Oh my gosh, that's a whole bill within itself. A whole bill within itself. We're not even going to tap into a daycare bill. But just think about that. Will they be able to carry on and live the lifestyle that they're living while you're here? Will they be able to carry on and live that same lifestyle if something was to happen to you and that whole entire income was gone? Think about that. So you don't want to have to leave them back with no life insurance. And now your family, they can't grieve like they want to grieve because they're trying to figure out a way, for one, how to pay for final expenses, you know, in order for you to have a proper homegoing service. So they won't be able to grieve like they want to grieve. You know, they're going to be stressed, emotionally stressed, and financially stressed because they know that they don't have the money that they're going to need in order to put you away properly like they want to. Now, let me give you an example. I had a client and they had just bought a house, bought a new house. He had bought a house with his wife. He put off getting life insurance. He kept putting off getting life insurance. So when he passed suddenly, notice I said suddenly, his wife was left with that new mortgage. Because remember, I said they just bought the house. So his wife was left behind with that mortgage payment. And she ended up selling the home within months after he died because she couldn't afford to pay the mortgage. She couldn't afford to pay the mortgage. So you don't want that to happen to you or your family. You don't want that to happen to you. So that's why you have to plan ahead to make sure that this will never happen to your family. Now, let me tell you something. You know what? And a lot of people, y'all, I'm gonna drop a little gem right here. I'm gonna drop a little gem that I know a lot of people probably don't even realize or don't even know. Probably don't even know. Y'all, as you come on, please share the live. Please share the live. Because the information I'm sharing is for everybody. Everybody. Now, this information that I'm about to share with you, like I said, I know a lot of people probably don't even know this information. Hey, Jazz, thank you for joining. Hey, Deaconess Bannister, thank you for getting on. But y'all, so what a lot of people don't know, when you buy a new home, they always offer you mortgage insurance. Mortgage insurance. I know a lot of you have heard about it, mortgage insurance. So what they do a lot of times with the mortgage insurance is attached to your monthly payments. A lot of the lending places, the banks or whatever, they'll do that. They'll attach it to your monthly payment. But this is the thing a lot of people don't know about mortgage insurance. Let me break it down to you so you can fully understand what you got, so you won't be surprised if something was to happen and you got to get a payout. Okay, this is how mortgage insurance works. So let's say you got a $250,000 policy, mortgage insurance policy, because your home, when you bought your home was $250,000. So you took out a $250,000. Y'all share the live as you get on. Please share the live. Please share the live, because I'm about to drop some tea. That's what I'm gonna call it, some tea. So when you get the $250,000 policy, let's say the $250,000 policy probably costs you about, let's say about $150, $160 a month for your policy. Okay. So when you get that policy, let's say after 10 years, you pay down your mortgage. Your mortgage is down to, say, about $175,000 you got left on your home. Okay. Now, you took out the policy for $250,000, remember? But as you pay your mortgage down, your coverage decreases, but your payments stay the same. Your coverage decreases, but your payments, your monthly payment for that policy, it stays the same. So as you pay down your mortgage, your coverage is decreasing as your the value, well, the balance on your home decreases. The purpose of the mortgage insurance anyway is to take care of whatever balance is left on the mortgage if something was to happen to you and you can't pay your mortgage anymore. The banks want to make sure, or the lending institutions, they want to make sure that they're going to get their money. So all they care about is making sure that they get their money, that the home is paid off. They don't care nothing about your kids or you, how y'all gonna carry on, how you gonna live on. They care nothing about that. Mortgage insurance is just that. It takes care of the mortgage. But this is the thing, like I said, as the mortgage decreases, the coverage decreases, but your premiums stay the same. So you can have that mortgage insurance, say, for 29 years. You know, you got a 30-year mortgage. You can have it for 29 years. And let's say you just owe maybe one more payment on your mortgage, which probably your payments are probably like maybe say $2,000 a month. You probably owe just one payment. And something happens. Then guess what? Guess what your mortgage insurance is going to pay? That one payment. That's all they're going to pay. They're going to pay the house off. If you just owe one more payment, that's what they're going to pay. They're not, that $250,000 policy you took out the beginning of the 30 years when you got that mortgage, it decreased over the years. Mortgage insurance is just that. They're going to make sure that the mortgage is paid off. So if you only owe one more payment on the mortgage, when something happens and you need to file a claim, you just going to get, they're going to pay one payment. That's all they're going to pay. But here you were, for 30 years, you've been paying $150,000 $160 a month for this mortgage insurance. And then when it's time to pay off, like I said, they're just going to pay whatever the mortgage is worth. So if you only owe one more payment on it, that's what they're going to pay. That's how mortgage insurance works. A lot of people don't know that. Hey, Kobe, thank you for getting on. Hey, Sister Kim, thank you for getting on. Hey, Sid, thank you for getting on. That's all they're going to pay y'all. So you got to understand this. Mortgage insurance is for the mortgage. It's just for the mortgage. It's not for you and your family to have extra money to live on if something was to happen to your loved one, your spouse. That's not what the mortgage insurance is for. It's just to pay the mortgage. So y'all understand that. Now, this is the thing, and I tell people all the time, okay, yeah, it's good if you have mortgage insurance, but why wouldn't it be even better just to have a life insurance policy? So if you took out a $250,000 policy and you had that policy for 29 years, they're still going to pay you $250,000 because you're still paying the same amount of premium every month for 29 years. Wouldn't that make more sense? And then think about it like this. Not only do you have money if you want to pay the mortgage off, you still have money to take and make sure the kids continue to eat. Make sure that the kids have money to go to college if they decide to go to college. Make sure that you're going to have money so you can live on successfully and comfortably and continue to live the lifestyle that you was living before your spouse died. So wouldn't it make a little more sense if you just have life insurance in general than investing in a mortgage insurance policy? I don't know. I'm just put it in the chat. What y'all think? Y'all tell me. Y'all tell me. Do you think that it makes a whole lot more sense? Just put yes or no. Do you think that it makes a whole lot more sense if you get life insurance? So if something happens, then you're going to have whatever you took that policy, the coverage amount that you took out from the beginning, that's what you're going to get. Or if you get mortgage insurance, whatever the mortgage balance is at that time and something happened, that's what you're going to get paid. Y'all tell me which one make more sense. I'm looking in the comment section. I'm looking to see what y'all say. Put yes or no. If you think it's to make more sense to get life insurance, put yes. If you think it's make more sense to get mortgage insurance, put no. Yes or no. That's all I'm asking. Yes or no. and y'all tell me what y'all think. Because I look at it like this. Not only do I want to be able to continue to live in the house and be able to pay off the mortgage if I choose to do that, but also I want to be able to have enough money so we can live on. Especially if I have kids, I want to make sure that my kids going to be able to live on comfortably without their dad being there. And I think that's what we all want. You know, we don't want to have to just have to up and move if something was to happen and we can't afford to live in the family home after one spouse is deceased. We don't want to have to just be uprooted like that. If we get uprooted, we want to uproot because we want to and not because we are forced to do that. Okay? So, with the mortgage insurance, I think that the mortgage, that makes much more sense than you just taking out. I mean, the life insurance makes much more sense than you just taking out mortgage insurance and not having anything left over for you to live on after your loved one dies. Okay? Now, I hear these excuses all the time. We're going to call this reality check. Reality check. The excuses that I hear all the time, common excuses that people give me when I try to talk to them about life insurance. It's too expensive. Well, life insurance is probably less than what some people spend a month on buying coffee. Starbucks? Oh my God, Starbucks. Think about it. And I know the last time I was at Starbucks, I know I spent about almost $10 on a cup of coffee, probably no bigger than that. But I did have a little, add in all the other little extra syrup and all that. But anyway, nevertheless, it was almost $10 for that cup. So think about it like this. If you let's just say you're going to Starbucks, even say this once a week, and you're spending almost $10 on a cup of coffee going to Starbucks just once a week. That adds up to almost $40 a month. $40 a month that you're spending, and you only got 4 cups of coffee. You can take that money, and I can promise you, you can get a good policy probably for less than that a month, for less than what you're spending on a cup of Starbucks coffee once a week for a month. Now, another excuse that I hear a lot of people say, "Hey, Stephanie, thank you for joining. I'm young and healthy, and I don't need it yet." Well, guess what? That's the best time to get it. That's the best time to lock your rates in when you're young and healthy. Life insurance, you get it before you need it. So when you need it, you already have it. You don't wait till you need it to get it. Now it's too late. Because 9 times out of 10, if you're having a lot of health issues, you may get declined. So you don't wait till you need life insurance to get life insurance. That's not how this works. You get it when you're healthy and you don't need it yet. That's when you get life insurance. That's the best time to lock it in, to lock in your good rate. You get a good rate. I don't know why my screen keep going out. But anyway, another excuse that I hear often, I have insurance through work. That's great. That is great. But I always tell my clients, let your job insurance be the icing on the cake and not the cake. Because anything can happen. For one, they're not going to allow you to get enough insurance that you're going to need in order for your family to carry on if something was to happen. Like I explained on my last video on when was that? Last Thursday. I share with you guys that they're only going to allow you to get 1 to 2 times your salary. So if your salary at work is, say, $40,000 a year you're making, they're only going to allow you $40,000, well, 1 to 2 times your salary. So it could be, but they only allow you to get 40,000, no more than $80,000 a year. Now, if you got a whole family, what is $80,000? Do you think that's going to be enough for your family to carry on if something was to happen to you and that whole income is gone? Especially if you're the breadwinner of the family. Let's just say you're the breadwinner of the family and you're bringing in the most income. How is that going to be sufficient enough for your family to carry on if something was to happen to you? And then, Lord forbid, if they get the money and they don't take it and invest it the right way, then that money can be gone in an instant. It may sound like a lot, but I promise you, when you think about being able to take care of all of the bills now, because you have a whole income gone, that spouse income is gone, and now you got to take care of all the bills. $80,000 is not going to carry you that far. You probably be able to pay bills maybe for a year, maybe 2 years, but after that, then what? Then what? Especially if you just bought a new home, you'll probably be selling your home within that 2-year period, because you can't afford to stay there, because you can't afford to pay the mortgage by yourself. Okay, so y'all, we got to be smart about this thing. I just want to make sure that you guys understand, for one, how mortgage insurance work, because I know a lot of people have mortgage insurance. For two, I want you to understand that if you just bought a new home, you just had a new baby, you must get life insurance, you guys. With a new baby, you must get life insurance. And Lord forbid, if something was to happen to the baby, at least the baby is covered. Or not just that, not just for the baby, but for you. Because now, let's say something happened to you and the baby probably 1 year old or a couple of months old, a newborn, and something happens to you. Okay, now that baby still has to grow. That baby still has to eat. That baby still need diapers. That baby still need milk. That baby still need a place to stay. That baby still probably want to go to college once that baby gets up at an age where they'll be able to go to college. So you got to think about all of that too. If you just had a new baby, yes, you must make sure that you have sufficient enough life insurance so that if something happened to you, that child will be able to live on and live a decent life and comfortable life. Okay. And of course, if you have kids, the same scenario. You want to make sure that that child will be able to live on comfortably after one parent is gone. But y'all, that's all I have, y'all. That is it. I'm trying to keep these sessions down to at least 30 minutes, because that was my whole intention from the beginning, 20 to 30 minutes, and that's it. But I know the first 2 sessions, it carried over for a little over an hour for both of them. But we're going to start cutting back to about 30 minutes on our sessions, you guys. So that's all I have for you on today. Now, this is the thing. Like I said earlier, if you're interested in starting a new career, if you're interested in just making a little extra income, and you want to find out more about getting into the financial service business, please contact me, inbox me. If you have my phone number, text me, call me. You can send me an email. I'll drop my email in the comment section on this live so you can get my email address. And let me know. We are always looking for new agents. And even if you just you just learn the information so you can have it for yourself to share with your family members, that is more than enough, because somebody got to be the one who educate the family on building some generational wealth, because we need to start building some generational wealth. And with the way the economy is going right now, we all need to start building some generational wealth. Okay. So that's all I have, y'all. Have a wonderful day. And I will see you guys on today is Tuesday. I'll see you guys on Thursday. I'll see you guys on Thursday at 5 p.m. where I'm going to be dropping some more gems. Okay. So y'all have a good one. And remember, with life insurance, don't wait until you need it to get it, because then it might be just a little too late. Y'all have a good one, and I'll see you on Thursday.